I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Welcome to Trader's Life, episode 11. And my guest today is Jeff Yastine. Jeff is a swing trader in stocks. He started his professional career as a journalist, later specializing in financial journalism. With his growing fascination in how the markets work, he started trading himself. Having plowed through some early setbacks, he now trades full-time. Jeff works with some highly experienced traders at WealthPress, where he is developing his own mentorship program and newsletter. We recorded this episode a few days before the US election, at a time when COVID cases were spiking globally and indices were taking a real beating. Jeff, how's it going, and how are you finding it in the markets?
It is chaotic. It is one of those environments where if you haven't been through these kinds of situations before regarding a trading environment in which every person, whether they're a professional or just a retail investor, finds it hard to fathom, hard to understand. If you haven't been through that situation before, it can just be a very depressing environment and just want to make you throw up your hands. I find these kinds of situations just fascinating because that with enough patience, the dam will break, so to speak, and there will be lots of opportunities that present themselves.
Yeah.
And so it just takes that ability to just kind of sit back and wait, which is very, very hard for all of us. One thing we love about the markets is that degree of immediate gratification, or whether it's in that minute you put the trade on, or a day or a week or a month later, you want that gratification to say you're right.
Yeah. And do you think the dam will break more bullish or more bearish? Or you can't really decide just yet?
I think it will ultimately break more bullish. I'm actually gratified in what I've been seeing the last handful of days here, in that with the NASDAQ and the broader markets beginning to sell off a bit here. I think that's good, actually, because you can sense that the fear level is rising. And that's actually a good thing, because it's when the market falls and people become more emboldened, that is more likely to be an actual real grinding bear market, as opposed to just a sharp correction.
Yeah, historically that seems to be true, doesn't it? The
Yes.
Wall Street crash of 29, that's famous. Everything's fine, and then we had the bubble in 2000, 2001, that went down. Yeah, when the markets are too bullish, that's usually when you should start getting worried. Yeah.
Yes, for sure.
Yeah. So you were kind of just standing on the sidelines watching, or are you taking part in any of this sort of volatility, or?
I have mostly in my personal trading, I've mostly moved to the sidelines. I'm probably 2/3 in cash right now in my handful of trading accounts.
Yeah.
And that goes to what I was saying earlier, in that sometimes you just have to sit back. I hate to sound like some sort of a surfer or like a Zen trader of some kind, but you do have to. There are points where you need you to sit back and let the market come to you, and not be so anxious to jump right in. If you look at the market like an adversary, the market works against you in that respect. As where if you sit back at times like this, where people have been very, very keen to be all in on the market, at the point where that's finally ground out of them, that enthusiasm to buy stocks, that's the point where a lot of really great companies and great speculative companies that you want to buy, that you always wanted to buy, that's the point where you can get in, and they'll just be kind of lying there waiting for you to buy them. And nobody wants to buy them because so many people were burned on the way down.
Yeah.
That's really the key there.
Yeah, yeah, exactly. Anyway, I'm gonna wind us back a bit in time in terms of your sort of personal history and trading. You told me you started off as a journalist. You still are, I believe, a journalist. Um, so how did you move from writing about the markets to actually trading, and what kind of trades did you take at the beginning?
And I will just correct you slightly. I am no longer a journalist. I'm
Okay.
a trader and a newsletter editor, and somebody who just functions strictly as someone who tries to help people understand the stock market, offer up recommendations and that sort of thing. So
Yeah.
I've definitely stepped out of the journalist role. When For me, my path to becoming a trader and serious investor uh, began though when I became a financial journalist. I was trained for journalism, went to journalism school at the University of Florida. This is back in the 1980s, and worked in local news for a handful of years, in different metropolitan areas, and did not find that very challenging. And this is now by the early 1990s, found the stock market fascinating, and had only marginal exposure to it at that time. And basically, on my lunch breaks and what have you, I'd watch if I could find a spare TV in the TV station. Watch. It wasn't CNBC in those days. It was called FNN, Financial News Network, and became even more fascinated by it. And decided, you know what? Why don't I transfer my skills as a journalist to financial journalism? It seemed like a fascinating area, and the only way you measure things is whether stocks go up or down, and the news is very much geared towards that as well. Does it help people make money or save them money, keep them out of bad trades? That's generally what financial news is all about. So I wound up working as a correspondent and a occasional anchor at a program called Nightly Business Report, which aired for about 30 something years, 32, 33 years on the public television network, the National Broadcast Network here in the United States. And then back through the past decade, it was still aired on PBS, but it was controlled by CNBC in its final 10 years. So I was there when it was more of an independent program. But anyway, so I became a journalist and a financial journalist, and I would be interviewing these market strategists. I interviewed Warren Buffett a couple of times, and a lot of these financiers and hedge fund managers and those types. And so I was really privileged to have sort of a ringside seat to the thinking processes of these individuals. And it's great because then when you are talking with them, of course you're asking your questions to get your quotes and your sound bites and what have you, but you also have the opportunity to toss in a lot of other questions that are really for your benefit. So I really got sort of I'll say a backdoor mentorship. It was a great way to learn about trading and learn about investing. Sorry, so kind of belaboring the point here, but uh, basically, I caught the bug. I caught the investing and trading bug, and was basically committing myself to learning how to do it. And by watching, these guys and a few women, as far as how they traded, and how you sort of stay alive in the markets, and it sort of just progressed from there. So I would do my regular day job at night, or excuse me, during the day, and at night I'd go home and plan my trades for the coming day or coming weeks, and do my personal stock research and that sort of thing.
Yeah. And what kinds of stocks were you looking at right at the beginning? Were you more tech oriented or?
It's weird, but I was focused more on industrial sort of stocks, retail stocks. I didn't really, in the early days, I didn't do much in the way of technology. I'm almost ashamed to admit that. And this is in the 1990s when
Oh, yeah. Well, they weren't so big, were they?
exactly. And part of it's just, it's just one of those things. Everybody comes to it from a different viewpoint, and of course, you're also influenced by the people you talk to, and in my case, the people you interview. And in some ways, it shows you how much, in terms of a bias, of how our viewpoints are influenced by who else we talk with. And in those days, if you talk with a lot of people on Wall Street, they not that they would say the internet isn't anything, but this is back at a time when I can remember in 1999 and 2000, ordering stuff off of Amazon, and people would say to me like, "You're putting your credit card out there on the internet?"
Yeah, exactly. I remember those days.
Yeah, exactly. So it's easy to look back in retrospect to say, why didn't you do this? Why didn't you do that? But when you're investing, when you're trading, you have to acknowledge your mistakes and your shortcomings, but you also have to sort of move on from there. And more than anything, you need a framework for how you invest, and you need to sort of stay within that framework and not keep shifting. I do buy tech stocks, and have owned Apple, off and on. I've shorted Apple off and on, um, and it's just one of those things where you just have to learn. I think that's the key thing, the key lesson here.
Yeah. Well, how much money did you allot for trading when you first started on your own?
When I started, it was about $30,000, and it was just money that my wife and I had accumulated, and just I began to trade it, and I didn't I didn't do very well in the beginning, and I think that's one of those keys where for so many of us, and I think that's kind of a lesson you hear from all of us when you begin to trade and invest, and you're doing it on your own, is eventually you sustain losses. And I can't remember exactly how much of that money I lost, but it was a considerable amount. I remember the pain more than anything else.
Yeah,
you
yeah.
know
I bet your wife does as well.
Definitely. And the key though is to learn from that experience, as most of us do, and sort of think, what did I do wrong? And so that began sort of the second phase. Again, for so many of us, this is a repeatable story on that. So you learn more about the risk side, and understanding that you may have a great deal of confidence, but the rest of the market may not agree with your choices, your decisions on those things.
Yeah. So do you think those early mistakes and losses and so on were due largely to going in with too optimistic a trade size?
Yes, yes.
Yeah.
I think that's a common mistake for many traders, even professional ones, is overconfidence. And because of overconfidence, you trade too large. And
Yeah.
the market has a way of making us, having us get punished for those sins at the times when we least expect and least want it to happen. And so it's a typical sort of bull market, bear market scenario. In a bull market, generally most stocks rise. Even the really terrible stocks generally rise. I remember reading once, a trader, a bearish trader, had written, if the monetary winds are blowing hard enough, even a turkey can fly. And
Yeah.
that always stuck with me. But the point
Yeah.
being that that's when we get lulled into sort of maximum optimism and maximum confidence, and at those market peaks, and we don't ever know really when those are going to happen, but at the market peaks, that's where suddenly you look, and 30% of your portfolio is gone, and
Yeah.
that is where it just becomes a devastating setback, mental setback for
Yeah.
so many of
Yeah.
us. So I always try to keep that lesson in mind, and sort of the mathematics of that in mind.
Yeah. How long was it before you went from enduring mostly drawdown weeks to profitable weeks?
It really was. It took like a full cycle, really. I'd say from like roughly 1996 or so, when I began to become serious about trading and investing, through like roughly 2002, which of course 2002, 2003 was when that was more or less the bottom of the Nasdaq
Yeah.
tech bubble burst, if you will.
Yeah.
And it was fascinating at that time to see how cheap so many stocks became.
Mm.
And for some of the leading stocks, like Microsoft is a good example, it fell between 2000 and 2007, it fell 70%. Even though its overall business was fine, it suffered from. I'm not going to go into the whole thing with Microsoft and Google and all that, but it just shows you how really strong stocks can really become pummeled on the other side of
Yeah.
a major trend change, if you will.
Yeah. So did you quickly identify what you were doing wrong, or was it just repeated patterns and back testing and looking at, mistakes to see if there was a pattern, identify a pattern either in your own behavior or the markets, or even, I suppose, jointly?
Yeah, I could see pretty quickly that the problem was I was trading too large.
Yeah.
But after that, of course, it becomes a test of discipline, right? I mean, sort of like food and calories. We all know we shouldn't have the scoop of ice cream, but we take it anyway.
Yeah.
And having that discipline to say no, or no, I'm not gonna buy 1,000 shares of that. I'm going to buy 500 shares. Those sorts of things, and also having that the courage, if you will, and the willpower to sell out of a losing position. That's the other big mistake that we all tend to make over and over again. Is if you're going to take a loss, take losses often, take them small, take them early.
Yeah.
That's my view of it.
Yeah. Are you quite ruthless with your losses, or do you just wait it out? I mean, you said you were a swing trader, so I guess
I
you give
am.
things time. Yeah.
I'm very ruthless about it now.
Okay. Yeah.
Almost rigid. I try not to be, but generally, what I'll do is I will look, and when I buy stock, I'm just making a presumption that I'm catching. I'm looking for certain technical parameters. Like I love cup and handle sort of formations, and that look that certain stocks have when they're about to take off. And of course, probably half the time that works and half the time it doesn't. So the idea when you're approaching the trade is to look below that breakout point for a support level. And generally, in between that breakout point and the support level beneath it, that's my leash, if you will. If I was walking my dog, that's the amount of leash I'm willing to give that stock to take a loss. And I've actually calculated out mathematically so that if I'm wrong and the stock goes back down, it's amounts to, depending on what kind of risk I want to take, 0.5% of my portfolio, 1% of my portfolio. And what I've found over time is it allows me the ability to stay with these trades longer, because the best trades take a while to really
Yeah.
play out, to become those big fabulous trades that are up 100%, 200%, 300%, that sort of thing.
Yeah.
So
Yeah.
going small like that, and then adding in later, is to me the key, because the best stocks, when they pull back, they tend to have these like shallow pullbacks. And so often, how many of us, everybody listening to this, you'll buy a stock thinking it's a breakout, and then it peels away and starts heading lower, and you're like, well, maybe it'll be okay, maybe it'll catch support. And it's like, no, you just gotta cut your losses and move on, and maybe it'll form another cup and handle a week or 2 weeks later, and buy that one instead.
Yeah. Would you say that you've got a style, a trading style? People often use this sort of phrase. Have you got a trading style?
I would characterize my trading style as a fusion style, in that because of my background as a financial journalist, I sort of became very focused on the fundamental side, right? Like in trading and investing, there's two religions really. There's the technical analysis religion, and there's the fundamental religion. And my style is a combination of both, in that I love looking for stocks that if I can look at the analyst estimates, you can see that the earnings in the next quarter or the coming year are going to accelerate higher. That's the expectations of Wall Street analysts. And yet, on the technical side, the stock has fallen to a new low, but now is beginning to bottom. And the sort of oscillator signals that I'll look for and the cup and handle sort of formations I look for indicate like, hey, maybe the selling is gone here. Maybe this is a good spot to buy low in preparation for this acceleration higher. So it's really a fusion style.
Yeah. So sometimes I find there's a sort of mixed message thing going on with a number of stocks. With we referenced just the other day the DraftKings, so for example, a company that was doing really well during the first part of COVID or through the summer, became a sort of fashionable stock that people talked about. People talked about the Robin Hood effect, and that was one of the kinds of stocks that people go for. And they had solid technicals in terms of the price and relation to EPS, earnings per share. But then suddenly it becomes out of fashion, and if you look at it now on the charts, it's dipping down. So how do you deal with that kind of discrepancy where you have this big push for a stock and it's even supported by strong technical data, and yet you look at the charts and you think, whoa, what's going on here? It's a confusing scenario. How do you
really
deal with
can
those?
be, and it can be very frustrating, when, as you were saying, you're buying the stock and everybody's talking about how great it is, and somehow it seems like you're like the last person left holding the bag. You're the last
Yeah,
call. You bought
yeah,
there's a term traders use. You bought the top tick on a
yeah.
stock, and we've all done it from time to time. But that is why I like to use a fusion style of trading. And like what I'm looking for is companies that I know they're either earning money now or they're going from posting negative cash flow to positive cash flow, or from uh, being in the red to a quarter or 2 quarters or 4 quarters from now, they expect to be in the black and posting positive earnings. I'm looking for stocks that are going from a not good story to a better story, or from a better story to a great story, and that it's being played out ideally in its financials. And that's how I sort of try to define between sort of the DraftKings of this world, which, like, DraftKings as a stock, I'm not keen on, only because, and somebody asked me about it about a month, 2 months ago, and I said, like, the problem is they don't earn any money, at least not yet, and maybe they will eventually. But as we've all seen over the past 2 decades, and obviously longer than that, uh, just because a company loses money doesn't mean the stock can't go higher. So there is no one right answer on that. To go back to your original question on that. So I just try to look at each trade as sort of a discrete thing. Sometimes it's just timing. You can't, like, it's almost like you can't look too deeply at some of these and say, oh, why is it going down? I don't understand it. And it's just, you have to sort of just, it's like surfing. And I'm not a surfer, but I live at the beach or near the beach. And when I watch the surfers in the winter here in Florida, which is the only time you get any decent surf, they're just out there, and they catch some waves, and they're small waves, and they ride them a little bit, and occasionally there's a big wave, and they get a good run into the beach. And you can't really ask why. And I think that's one of the keys. If you're trading, you just have to sort of approach it with that surfer mentality.
So how do you go about doing your research? I mean, are there certain sites that you like to visit and check data there? What do you do?
Sure. There's a site, and I'm going to limit my suggestions here to ones that are just free, or nominally subscription. It's not like institutional quality stuff. But, like, there's a site I look at called it's called Koyfin, KOYFIN.com, and it's a kind of a combination of both the charting site, but there's a wealth of good quality financial data on there. So as you can tell from what I tend to look at, one of the first things I'll go and do is check, well, what are the Wall Street estimates on a company? And I don't like having to go all over the place on the internet. I just want to go one place if I can, keep it simple, and know that the numbers I'm looking at are the proper sets of numbers. And as a free site, I like koifin.com because it's they have good data, and I can actually check it against I still have a subscription with Capital IQ, which is an S&P institutional quality service. And when I look between the two estimate ranges, they're generally really close to each other. So I'll use that for looking at estimates for the Wall Street analysts. And also I'll look at the things like the revenue, cash flow, net income, and then I'll also look at sort of value and financial profitability metrics like return on equity and gross profit margins, those sorts of things, which help show you whether or not, even if a company's financials haven't turned around, if you see that its gross margins are increasing, then it tells you that things are going on in the background that are allowing them to basically retain more money with each sale, of their product or service, that sort of thing. And as far as charts go, again, I mentioned Koifin, and there's another one called Trading View, or is it Trading Views?
Yeah, Trading View, yeah.
.com, which I've used for many years, and just find it very intuitive and easy to enjoy. And I just use the free version of it. I guess just because I'm cheap.
No, it's fair enough. Yeah, is there anything you can single out as the most important element in deciding to put on a trade, technically speaking?
Yeah, from a technical perspective, two things. One, I just use a basic oscillator signal. I like to see it, and you can find it on pretty much any internet-based charting system. It sounds kind of stupid to say it out loud, but I think it's called the awesome oscillator. To me, I just try to keep these things very simple. You're just trying to get in the direction of the trend. You can never really know that for sure, and unless you're in looking back at things in retrospect. So I'm looking for a stock that in an oscillator signal is just breaking above or is at the going from the negative and going up through the what's called the zero level, and it's about to move to a positive trend as far as the oscillator goes.
And how does that differ from, for example, stochastic and RSI?
It's just got a different context to it, as far as it tends to be more of a longer term thing. If you're using stochastics, you're looking to buy dips and those sorts of things, and you're doing it on a much more. There's a lot more. I won't say noise, because I think stochastics is a great signal generator for depending on the kind of trading you're doing. For the kind of trading I'm doing, which is more swing trading, I'm looking for just something basic to tell me that the trend in the stock is about to go from negative to positive. I'll look for that sort of cup and handle formation. I love stocks that have been on a daily chart, have basically been going sideways, and then you'll look one day or over a couple of days, and you'll see suddenly that it's popping out of that narrow range. I love that. Now, it doesn't mean that it works every time. It doesn't. But it's amazing how I'll buy these things, and the stock will just slowly work its way higher after that initial pop. And if you stay with it and you don't get really nervous, they can often turn into really great trades. So that's another thing to look for. And the other basic thing is a stock getting above or breaking through the 200-day moving average. And again, there's plenty of other ways you can do these sorts of things. But like I said, I try to just keep it simple and just look for those handful of signals that help to show me whether or not it may be worthwhile getting into a stock.
Yeah. And this year, with the pandemic and all that, do you go more for cheaper stocks or the mid-range stocks or the FANG stocks, for example, or do you just mix it all up?
I have to tell you, I tend to mix it all up. It's funny when I talk to subscribers and journalists and media folks will call me from time to time and get in touch and ask me my opinions on things. And there's no real. I try not to limit myself to any one particular kind of stock. And the reason why goes back to my experiences in the 1990s and with the tech bust, or we can use the financial bubble, the housing bubble, and aftermath of the crisis in the later part of the decade, where certain stocks work fantastic, and when they do, it is just a wonderful thing of beauty. But of course, when the tide changes, it doesn't matter. It could be the greatest stock in the world and have all kinds of great earnings. It'll still go down. And so I try not to limit myself too much in both the stocks I recommend to people as well as the stocks I do on my own. And I try to keep those separate for conflict of interest reasons. But I try not to limit myself. And I'm just looking for stocks that go up. That's the way
Yeah.
the way I try to think about it. It's like we try to make things so complicated in trading, and yet its simplicity is really what it's all about. I mean, what's the ideal stock? The ideal stock is the kind that starts at the lower left hand, on the chart, the lower left hand part, and goes to the upper right. That ultimately is what I am looking for.
Yeah. How do you decide when to take profits?
I will look at a couple of different things. One is just if it's gone on a great long run, and I've gotten a nice chunk of profit out of it, and I don't have as much reason to expect that from a earnings basis, that it's going to be posting even greater earnings on a more accelerated scale, 2 quarters, 4 quarters down the road, or maybe a stock that still is losing money, but if you're buying these trends using that sort of surfing analogy I was telling you earlier, you're just riding them higher, and you just don't have no idea you're riding them along with all the other traders that are behind a lot of these moves. So
Yeah.
sometimes I'll just look for see whether or not it's had a pullback. When it has a pullback, if it looks like a shallow one, I'll stay with it. If it looks like it's sharp and it's pulling back a larger percentage than what I feel comfortable with, then I'll just exit out of it. And again, I try not to think it through too much, make it too complicated. If it turns out I'm wrong, fine, I'll buy into it again, and maybe I just buy into it at a smaller level, smaller share level, and look to ride it higher from there. I've done that many times too.
Yeah. I suppose one way of exiting a swing trade, I imagine, would be just to keep pushing your stop up, 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 and up. And then if there is a dip, you have to kind of think, well, I either leave it to the stop or I move the stop down a little bit again, uh, or I just close it. Do you use the stop in that way?
Yes, I do, and I have to say, like on the exit side of it, a lot of it is just instinct, and I'm not even saying that my instincts are correct. 80% of the time somehow. To me, I want to be able to lock in those profits, and I just recognize that there are times where you're going to be wrong. So I would just rather keep my if I have to take profits early, that's fine. To me, it's sort of like, okay, that was that wave I just rode, and if it turns it and it breaks higher, fine. I'll buy the next breakout. And again, maybe I'll just buy it at a smaller price level so that if it wiggles around a lot before it then starts to trend higher yet again, I'm not getting nervous about it and punching out of it so quickly.
Yeah. Yeah, makes sense. Yeah. So moving on to the sort of day to day, how many hours do you spend on trading? I mean, are you almost like treating it like a sort of office job? I'm going to be 8 hours a day on this, or is it very much something you can walk into and step away from, have a day off, 2 days off, whatever?
Sure. Working as I do for the company I work for, then we're developing my newsletter. It's called WealthPress. Uh, I'm paid to to develop videos and help people find opportunities and help them sort of decipher what the stock market means and how to trade and how to invest themselves. So I'm sort of paid to be in front of a screen all day. But I will tell you that for my trading style, I- I'll take like a Sunday and I will just sit down in front of like my tradingviews.com charts, and I'll look back and see like what were the big percentage gainers over the past week. What were the big and on like a daily basis, right? And
Yeah.
I'll look and say, well, what were the big percentage gainers over a weekly basis? And I'll just sit there and look through the charts and look for those sort of potential breakout patterns, like I was saying, where quite often it's a stock that's been trading sideways, and then it gets that nice. If you're familiar with candlesticks, gets that nice big, I think it's called a hammer, uh,
Yeah.
a hammer bar, and I'm looking for that thing, especially on a weekly basis, where it wasn't just a one day blip, but it was a fairly substantial move over a week. And I'll just sit there and look at them, and I'll then do some nominal research, earnings, revenue, all that kind of stuff. And the other thing I'll look at is in the United States, it's just legal insider trading. When executives sometimes for their stocks, especially if their stocks have fallen to a certain level, sometimes they'll say to themselves like this: the company I work for, our stock has gotten so cheap, I want to buy some shares. And in order to do that, they have to fill out this thing called a Form 4 and file it with the SEC. So once they file it with the SEC, it becomes public record. And all that, you can find free sites. I use one called openinsider.com where they publish all this stuff. And just because insiders are buying their own stock does not mean the stock is going to go up. Doesn't mean it can't continue to go lower. I've seen that happen too. But
Yeah.
sometimes especially with stocks that have been lower, and you see the insiders come in and buy, that's usually a positive sign. It's
Yeah.
no guarantee, but it's a nice positive sign. So I'll look for that kind of stuff too, and then I'll just put the trades on over over that Monday morning, and sometimes I'll just sit on them and watch them a little longer. I try not to be so uh, lemming like in terms of gotta buy it, as soon as the market opens, because I feel like that's almost playing into the market's mentality, that it
Yeah.
wants us to be
It's a
greedy, if you
frenzied
will.
mindset. Yeah.
Yes, yes,
Exactly.
exactly.
Yeah.
This summer in July, my son and he's 13. We decided to go off and hike the Appalachian Trail for 4 days, which is it's like a 1,500-mile hike if you did the
Yeah.
whole thing from Georgia to Maine. I just did 4 days. He and I just did 4 days in Georgia from the southern end of it. But my point is, so for 4 days we were hiking on the Appalachian Trail. I had a full slate of stocks on, and I didn't worry about it in the least. The only time I could check them was when I got to the peak of a mountain someplace where you might get a little service coming up from the towns below. But my point is, there are ways to trade, and that's what I like about swing trading. I don't have to be sitting in front of the computer if I don't, want to be, or if I don't need to be.
Yeah. So it takes some of the stress off from that point of view, doesn't it? That constant, going back to your screen to see I mean, with Forex, you're very often looking at the damn thing every hour or so, or
Yes,
even more, because it is what it is, it's just more volatile, and you're inevitably drawn to it that way.
that's so true, Nick. And forex
Yeah.
trading is interesting. I tried doing that. I guess it was about 15 years ago or so, and in many ways, it's very similar to what you're doing with stock trading, but it very much is. You have to be just extremely methodical, as you were saying there.
Yeah.
You just have to sit down, look for your pattern or whatever your system is, and just do it. And you just have to sort of grind it out, and not push your luck too much, and just keep your if you really have an instinct about something, great. But again, probably half the time your instincts are going to be wrong, and that's where the money management and risk management side of things, I think, comes into play.
Yeah, absolutely. Yeah. Well, let's talk about WealthPress and what you're doing there, and your subscribers and the videos that you're doing. Talk to me a little bit about that.
Sure. Right now, I am just doing videos, and I write articles based around those videos that we post onto our YouTube site. And I have sort of an email list, and you can find it on the WealthPress site that you can subscribe to get my particular videos. So I've been there about 3 months, since basically the last week of July or so, and it's a great organization. Love being with them, and the other gurus I work with, like Roger Scott and Lance Ippolito and the whole group, are such smart professional traders, and there's so much that people can learn, and it's great because we all have different takes on things. For so many of my colleagues, it's it's options and that sort of thing. And so I feel like I bring like a somewhat longer view and time frame to my trading. And
Yeah.
there's always something there for everybody to grab. So it's a great organization to work for, and I'm looking forward to launching our newsletter, my newsletter, which I'm hoping we'll be able to do in the next 2 to 3 months, before the end of the year or early in the new year.
Yeah. Okay. Sounds great. So the website for people to find you would be wealthpress.com.
WealthPress.com. There is a Jeff Yastine site in development, but it's not ready for prime time yet. And in the meantime, if people want to get sort of my take on the markets and my both, and also see my videos and everything else as well, you can find our YouTube site, on WealthPress, our WealthPress channel on YouTube. But also, I have a Twitter feed. It's at Jeff Yastine, JEFFYASTINE, and I also do kind of a running commentary. Not all the way through a trading session, but I'll just post my thoughts and ideas as they come on a Facebook page that I maintain. It's on Facebook, and the username is Jeff Yastine 1, the number 1. And so between that and when the Jeff Yastine website comes up on WealthPress, I think we'll have things covered.
Yeah, great. So any of you out there looking to have a go at swing trading, if you're tired of losing on Forex or whatever else you've been doing, they should look you up. Yeah, good. Well, I'm going to wind it up there, Jeff. So thanks very much for talking to me. It's been a pleasure.
It was great. I enjoyed chatting, and I appreciate your time and appreciate everybody listening.
Likewise. Okay. Have a good day. Thanks.
Thanks, you too.